Underlying many of the debates here at the symposium of central bankers in Jackson Hole over the past couple of days has been a simple question. How much more monetary firepower do our central bankers have?
Having rescued their economies during the Great Recession, central banks are now presiding over a slow growth rut. With interest rates very low, some economists are questioning how much scope central banks have to galvanise their economies.
We are expecting too much from our central bankers because monetary policies really run, in many ways, its course. Monetary policy has been extremely competent and needs to continue to be competent, but it's too much to think that monetary policy can provide a liftoff in growth at this point in time. That really has to come from real side reforms that our lawmakers, both here in the United States and abroad, need to do. We need structural reforms, everything from immigration to deal with the fact that we have a shrinking labor force in advanced economies, to trade policy.
Yet there is no doubting how high expectations are. Activists from the Fed Up group who met Federal Reserve policymakers at the Jackson Lake Lodge on Thursday made it clear they are counting on loose Fed policy to help alleviate the high rates of unemployment that still affect many African Americans and Latinos in the United States. Central bankers themselves by no means think they are out of ammunition if a downturn strikes.
I liked Chair Yellen's speech on this. I thought she did a good job of outlining that there's quite a bit of firepower left should we hit another downturn somewhere down the road. But I don't think that's really the situation that we're in. What we're in is low growth, low real interest rate, and low productivity growth regime.
Yet with rates already very low, central bankers here were discussing alternative ways of injecting stimulus. One of those is negative interest rates, which are now being used in major economies including the Euro area and Japan. Speaking here on Friday, Federal Reserve Chair Janet Yellen did not mention negative rates as a policy option, suggesting the US central bank is cautious.
I think it may be different in different countries, but I think all central bankers have to be careful about this. This is uncharted territory, and there are a lot of contracts that promise returns in nominal terms, and as interest rates stay very low or even get to negative territory, it might be very difficult for pension funds, insurance companies to actually make good on those promises, especially if these things stay very low for a very long period of time.
Adding to the haze surrounding monetary policy this year at Jackson Lake Lodge have been forest fires, which have been raging to the north of the hotel. You can see some of them smoking across the waters from where I'm standing. They've been the subject of ferocious battles by local firefighters.
The outlook for the world of central banking that has emerged from the Jackson Hole Economic Symposium this year is profoundly unclear. Having emerged as economic saviours during the financial crash, central bankers are facing the need to start educating populations about the limits of their growth-boosting abilities. Sam Fleming, Financial Times, Jackson Hole.